Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar corrected from its bearish trend on Friday as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, was flat at 106.10. With the Australian dollar witnessing a strong rebound in front of the key support area around 62.80.90, we can see that the dragonfly doji to a bearish candle is now holding to a potential upward bias. And now with the market breaking through the midway point on the RSI could give further scope to the upside. But there's still a lot of work to do and the market needs to clear 64.75.85 to reignite the move further on towards the 60-day moving average around 65.35.250. Any pullback on the support is viewed around 64.10 to 63.75. In this week's economic calendar includes manufacturing and services PMI data from Europe on Tuesday and also GDP numbers from the US on Thursday. And then on Friday is the US Federal Reserve's third inflation gauge, the PCE or the Personal Consumption Expenditure Index, which will be unveiled on Friday. Additionally, this week, attention is drawn to Wednesday's Australian Consumer Price Index, or the CPI. So do keep an eye on that if you are trading the Australian dollar or any Australian cross currencies. Moving on to the euro, we can see the market has also staged a modest bounce, but not enough to give a strong clearance. That is towards the level of 107.1015. In light of the pattern though, keep an eye on this RSI because it is firming up with the MACD and therefore a break of 107.1015 could reinstate the upside on towards 109 or maybe even to 110. A key point to do be aware that a break would draw demand or support the bullish case. An interesting round of price action for the dollar yen on Friday, and it ends posting a hanging man after rejecting the key level at 153.70. In light of the RSI still somewhat buckled and showing a bit of divergence here, could see another down test at that key level at 153.70, and if breached, exposes and triggers stop losses down to 150.5. Towards that level, further evaluation is recommended after that. Viewing the top side, I still at this point have no view. Sterling took some losses again on Friday, but found support, that is, towards the level, coming in at 123.25.35. And while intact, I do anticipate a rebound that could see the market move on towards 124.80 and reassess from there. A whipsaw price action for gold also came into play to a negative bias at the close of Friday, and now could see a break of the level, which is seen as a key point at 2,360 to 66. If seen, that would give further scope towards 2,346 or lower to 2,324. While looking to the top side, I still hold a neutral bias. A very whipsaw price action also for oil on Friday as the market surged all the way up to $85 a barrel and plummeted and now posed a further threat that could see the weakness lead on towards 79.80 a barrel and reassess from that point. Although support is seen from that bottom area around 79.80, if breach could lead another downward turn to $76 a barrel. Any upside attempts finds resistance at 82.80 to 84.20. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoyed a great start to the new week.